All right, today we're going to do something a little different. We are going to take a technical stock chart, this one for the Oil and Natural Gas Corporation, or ONG, and we're going to decode it. The goal here is to turn all those, squiggly lines and weird symbols into something that actually makes sense.
So let's just dive right in. And you know what? Let's cut to the chase and start with the conclusion first. As you can see right here, the final analysis for ONGC is positive for the medium to long term. But the big question is, how on earth did they get to that conclusion?
Exactly. I mean, looking at the whole chart can feel like you're trying to read a secret code, right? But here's the thing. Every single mark on this visual map is a clue. So now, let's rewind and break this down piece by piece to see how the case for positive was actually built.
Okay, so before you start any journey, you have to get a feel for the terrain. And in the world of stock charts, that means looking at the big picture, the overall environment the stock has been moving in. So the analysis says the stock is in what they call a horizontal trend channel. Just think of it like a river. The price is just flowing along between two really well-defined banks. What this tells you is that for a while it's been a real tug of war between the buyers and the sellers, and neither side has been able to get a decisive win.
And here you can see that channel perfectly. It's almost like a highway, with the stock price just cruising neatly between the lines. This is important because it shows us the stock isn't in a nosedive or shooting for the moon. It's moving along a pretty predictable path.
Now, inside this channel, or highway, there are some really critical price levels that act like barriers. You can think of these as major landmarks on our map that kind of tell us where the stock might hit a wall or decide to turn around.
These landmarks have names: support and resistance. And honestly, the easiest way to think about them is as a floor and a ceiling. Support is the floor, a price the stock has a really tough time falling through. Resistance is the ceiling, a price it struggles to break above. Simple as that.
So according to this analysis, the support level, the floor for ONGC, is sitting right there at 232 rupees. This is the spot where buyers have tended to jump in and say, nope, not going any lower.
And the resistance level, that's our ceiling, is pegged at 254 rupees. That's the price where sellers usually show up in force and put a lid on things, at least for a little while. Okay, now this is the crucial part. Something big just happened. The stock managed to break through a previous resistance level. When a stock punches through its ceiling, it's like a rocket clearing the atmosphere. It is a huge deal because it shows the buyers have finally overpowered the sellers at that price point, and that suggests there's some real momentum to push even higher.
All right, now for the really fun part. Let's zoom in on those little cryptic letters you see on the chart. These are classic patterns that traders are always on the lookout for, and they act as clues about what might happen next. First up, you see a DT, which stands for double top. See how it kind of looks like the letter M? Well, this pattern is basically a warning sign. It means the stock tried to hit a new high, failed, tried again, and failed again. That kind of exhaustion is often a bearish or a negative signal. It's a red flag.
But on the flip side, we've got a DB, a double bottom. You could call the double top's optimistic twin. It looks like the letter W. Now this is a bullish or positive pattern. It signals that the stock hit a low point twice and bounced right back, suggesting it's found a solid foundation and might be ready to start climbing.
Now this is the main event on the chart, the IHS pattern. That stands for inverse head and shoulders. While the other patterns are good clues, this is the one that gets analysts really excited. It's often seen as a pretty reliable and powerful bullish signal that a long-term downtrend might finally be turning around. And you can see the formation right here. It's basically three dips or troughs, with the middle one being the deepest. That's the head. According to this analysis, finding this pattern is a major piece of the puzzle pointing towards that positive outlook. So how does all this stuff, the terrain, the landmarks, the clues, lead us back to our final conclusion? Well, it's time to put all the pieces of our map together. Okay, so let's put it all together. We know the stock is in a stable channel. We know it has a solid floor and a clear ceiling, and most importantly, we know it just recently broke through that ceiling. You combine all that with the bullish patterns we just saw, and everything starts to point in one direction. And that brings us right back to where we started. All those little data points, the channel, the support levels, that big breakout, the patterns, they all come together to form this one clear assessment from the source. Technically, positive. So there you have it. We've decoded the map. Technical analysis gives us this amazing framework for understanding what's been happening in the market based on past behavior. But like any map, it can show you where you've been and suggest where you might be going, but it still leaves you with that ultimate question. What's really waiting for us around the next bend?